Good afternoon, everyone. A warm welcome to the earnings Zoom webinar of Digispice Technologies Limited for Q4 and FY23. We have with us Mr. Dilip Modi, Chairman of Digispice Technologies, Mr. Sanjeev Kumar, Co-founder, Executive Director and CEO of Spice Money, and Mr. Sunil Kapoor, Full-time Director and CFO, Spice Money. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature. The actual results may vary as they depend on several external factors. A statement in this regard has been included in the results presentation sent to you earlier. We will commence the call with management taking you through the operational and financial performance for the period under review, following which we will have an interactive Q&A session. I would now like to invite Mr. Dilip Modi to commence the presentation. Over to you, Mr. Modi.
Thank you, Shiv. Good afternoon, everyone. On behalf of Digispice Technologies, I would like to welcome you all to the FY23 and Q4 23 presentation. We have been as a team, engaging on this platform with all of you over the last 2 to 3 years. And it's been quite a journey that we've had at Digispice Technologies over the last 3 years. We've always been looking out for the digitization agenda that our country's been working on across sectors, and particularly in the banking and financial services space. We've seen the digitization agenda only become bigger and bigger over the last 3 years. The last time we spoke, I mentioned to all of you that, at Digispice Technologies, we have 2 segments that we report in our consolidated financials, and we've done that consistently over the last 2 to 3 years. One is what we call the financial technology service segment, and the other is the digital technology services segment. We've also been calling out the numbers separately in our more detailed presentation packs on calls like this. The last time we spoke on such call, I did mention to you that on the digital technology services segment, wherein we basically work with enterprises, largely telcos, in the region, offering them B2B solutions. We've been seeing challenges when it comes to costs preceding revenue. This is basically a B2B business, where historically we've been working with telecom operators over the years, in providing them a lot of value-added services, starting with voice-based services, SMS-based services, and then moving to mobile applications and various kinds of platforms. As that industry has moved more towards data and more OTT services, sitting, on the telco platforms, and many of the telcos themselves launching their own OTT services, we have seen a big shift in their focus, away from working with third parties on pure value-added services to working with more, OTT partners, building mobile apps directly targeting consumers. Looking into, the kind of platforms we worked on, we tried to work in the area of enterprise communications platform as a service. We looked at, mobile apps around music, content, gaming, and basically we've been working in the region. And during COVID, we really observed that, working in the B2B enterprise space proved to be pretty challenging because a lot of the partners held on to their vendors during this period of time. Therefore, penetrating new accounts became a challenge, and existing partners moved aggressively towards building out data networks and focusing on data services. So a lot of the services that we were working on, the focus from the telcos reduced significantly. So we saw a sharp decline in our revenues and margins associated with the digital technology services business, to the extent that last financial year 23, of our consolidated revenues, the digital technology services segment only contributes around 7%. However, the indirect costs in our consolidated accounts still account for about 25% in the FY23 numbers. So looking at, where we are coming from, looking at where this segment is going, the board of directors of Digispice met at the close of the financial year, early April, to review the performance of the segment, and looking at all the factors, strategic and regulatory and all the other aspects across the region, across markets, the board took a decision that we would exit the digital technology services segment as a company, and we would double down and focus on the financial technology services segment. And I want to talk to you about that. So we have now taken a decision, since it's a B2B business, we have contracts with enterprises and mainly telecom customers in the region. We also have contracts with banks and other utility companies. Given the duration of those contracts, given the kind of commitments we've made, the management is working to smoothly phase out of these contracts. So directionally, we are not going to be investing in this space. We're going to be focusing our investments in the financial technology services segment. So that's the first piece of information I want to share with all of you, and I'm more than happy to take questions at the end of the presentation on this particular segment. So going forward, our focus from this year and beyond is going to be on the financial technology services segment. Talking about the financial technology services segment, we continue to be extremely bullish on the opportunity. We are very much committed to solving for lack of access to financial and digital services in semi-urban and rural India. Over the last 1 year, we've focused on both growing and deepening the network in semi-urban and rural India, focused on bringing in new products on our platform to drive income for our merchant adhikaris, as well as to provide access to customers in semi-urban and rural to more services. We will talk about that during this presentation. And we believe that some of the tailwinds that we spoke about, the whole digital public goods infrastructure that the government is working on, whether it's in the commerce space or the credit space, we believe will lay a great foundation for our platform going forward. These are areas that we will continue to explore in the coming years, and I'm very confident that new revenue pools will get created for us and our adhikari base in the future. So with that, I would like to invite Sanjeev to start the presentation, to take you through some of the key metrics on Spice Money, which is going to be the business of Digispice Technologies. And post us going through all the numbers, I look forward to having an interaction with all of you, getting to hear your observations, your comments, and more importantly, answering some of your questions or some of the clarifications you may have. So I also look forward to an opportunity when the year closes at the annual general meeting, I really look forward to that as well. But I'm hoping that today we will be able to have a dialogue around the space that we are, as Digispice Technologies, focused on, and what we believe are, we see as the opportunities and even some of the risks and challenges in this space. So looking forward to that conversation. Now I would like to hand over to Sanjeev to please start the presentation. Over to you, Sanjeev.
Thank you, Dilip. Good afternoon, everyone. Thank you so much for joining this session. What we'll do is, between me and Sunil, over the next few minutes, we'll try and cover 5 sections. I'm going to talk about overall Spice Money performance in a snapshot, and then I'll hand it over to Sunil to cover the financial highlights, and I'll come back to talk on the business model. Next slide, please. Few of the key metrics that we measure at Spice Money. If we were to just take a year view from FY23 versus FY22, the first, very most important, is the customer GTV, the top line number, growing at more than 20%, from an 83,000 to 100,000 crore mark. The next important metric again is service fee revenue, which is from 341 to 401 crore. Service fee revenue is the revenue which we earn on the transaction income on a platform. This is again about a 17% rise. And the third, which is the service fee GM, 114 to 145, which is again about 25% growth. EBITDA does look lower than last year, but we'll talk about it. There are some, like we had said earlier, while we maintain to grow the core business, but there are other businesses, emerging businesses that we want to focus on, for which we're trying to build. And because we believe we're standing at a unique opportunity of being able to we have the right to win, and hence it's important for us to build those emerging businesses also. We'll talk about that. Number of adhikaris, we were 1 million when we started the year. We are 1.2 million now. Number of villages, again, just to demonstrate our focus on rural India, from 2 lakh to 2.29 lakh, and the number of blocks, which is the semi-urban India, over 6,500. So these are few very, very key important metrics. We'll talk about details on each one of them in the financial matrices. Next slide, please. Similar matrices on a quarterly basis. Q4, 24,000 to 25,000, a 5% increase. Service fees pretty much flat. Service fee GM again, roughly about 6% increment. EBITDA lower than this, but when you look at it's a 3.5 crore, but when you look at the details in the financial highlights, which Sunil is going to touch base upon, on the back of a 9 crore, you will realize the way the trend is moved up in the last quarter. So I think that's something that's going to come out very, very in a stark manner in the next few slides. So Sunil, may I request you to take over the financial highlights now? Can we go to the next slide, please? Yeah, Sunil, over to you.
Thanks, Sanjeev. Good evening, everyone. Yeah, thanks. So in this slides, we are covering the financial highlights of Spice Money. On the left-hand side, there's a 4 years run, how we have performed in the last 4 years, just to give an idea about that. Our customer GTV is growing by 66% CAGR and year on year, though this year the growth has contracted to 20%, and in the same manner, but the gross margin is grown in the last year by 27%. So our EBITDA, due to some investment in the indirect costs, which is almost 50 crores, the last year is 9 crores. And EBITDA is 1 crore. I will explain the makeup of this also. That's why there is a contraction in the EBITDA on overall basis in the next slides. And if we see the Q4 financial year 23 performance, our customer GTV has grown by 5% year on year. And if we see the gross margin, that has also grown by 5%. And almost the indirect cost is almost have grown, was stable in this quarter in comparison to the previous quarter. And EBITDA of 3.5 crores if we compare from the payment with respect to the EBITDA, and in comparison to the negative 1 crore. And if we see on the service fees fee, GM on service fee revenue, that's from 28%, it's improving kind of year on year to 36%, which is in the last quarter, it's 38%. And that's on the product portfolio. That's the service fee GM on service fee revenue is improving kind of year on year. We can move to the next slide, please. Yeah, as in the previous slide, we have seen there is a contraction of EBITDA in this financial year ending 23. If we see here on this slide, what we have done that we have bifurcated our business into 2 segments, core and new business lines. So we can better present about what we are doing, how we are performing in our core business lines, and where we are investing in the new business lines. So if we see on the end, this core business line and new business line, Sanjeev will cover in the next presentations on the business, how these are kind of how we have classified these core business lines and new business lines. And if we see on the EBITDA side, in this, if we see that core business lines, we have a kind of a stable EBITDA, though we have increased our gross margin from the last financial year from 127 crores to 165 crores, which is almost 38 crore gross margin has increased. So same value of investment we have done to expand our channel, and so the core business line EBITDA is on the same line as was in the previous year. And if we see on the new business line, which was having some, we have added more lines from the last financial year, there is a 10 crore EBITDA loss in the new business lines, because these business lines are kind of emerging, where we are investing for the future, and they will show the results in the coming period. And on the same line, if I explain the EBIT for the year, why it is so in comparison to 22 crores of EBITDA in the last financial year, and EBIT was 21 crores. The difference lies in the higher depreciation. Though we have another income of additional 2 crore rupees, but we have 8 crore rupees of depreciation and amortization, which was primarily due to the devices what we have deployed in the market, and we have depreciated those devices, and we have also taken a call with respect to some exceptional item which you can see in the results. With respect to that, whatever the devices we were having in the market which we have capitalized, we have kind of write it off, because from the perspective of that physical verification and taking the control of those devices is quite practically difficult. From that perspective, we have taken a call to take a hit one time as a special item, and that's so the reason of EBIT is less in comparison to the previous year EBITDA to EBIT proportion. That is due to depreciation of the devices, which going forward will I will say that going forward the depreciation will be very minimal in comparison to this 20 crore figures. Maybe almost 15% of what we are seeing here on this slide for this financial year. We can move to the next slide, please. This sheet contains of the overall consolidated financial summary of fintech segment and other segment. Fintech segment I have already covered. On the other segment, where Mr. Dilip has already provided the details about that this segment primarily consists of digital technology services segment, from which we are exiting. If we see that this segment was a dragging for overall results, and we can see that EBITDA for this financial year also, that other segment have a negative 23 crores EBITDA for this financial year. And in the EBIT also, that's a 14 crore negative. So going forward, this segment, as we are exiting, we have announced for exiting, we will be seeing that losses coming down from the coming quarters, and we will be exiting maybe in 9 to 11, 12 months from this business. As there are some contracts already, we have to kind of honor those contracts. We can move to the next slide, please. So these are the, this slide contains of some key operating metrics which we tracked and which we intend to share with you guys also. That one is service fee revenue. That's in last 3 years it has grown in 45% CAGR, and quarter on quarter. So there is a not much increase, but that's on overall basis it is increasing. And the same way the customer gross transaction value has also grown by 48% CAGR, and quarter on quarter it has grown by 2%. And because we are primary product and major product, hook product is APS, and we track the market share also, and for we have gained the market share year on year basis, and in last year we were at 16.4%, and we have gained 8 bits, that's 17.2%. Can we move to the next slide, please? So this slide contains about the products, how we have performed on our key products. On the left hand side, that's APS GTV that has grown by 36% CAGR, and though even we have seen some headwinds during this year about APS, even then we have grown. And ATM, we have grown by 24% CAGR, and there is some contraction on that on quarter basis. Recharge GTV, if we see that we have grown by 19% CAGR, and we have seen some contraction in this quarter on that. Though that's not significant, but that's a kind of a settling down kind of. There is always a not always a hockey stick growth. Always some quarters may have some contraction due to one or another reasons. If we see the bill payment GTV, that has also grown by 130% CAGR in last 3 years, and if we see that on the quarter-on-quarter basis, this has grown by 19%, and there's a split of EMI and others in this bill payment, and EMI has also improved from 391 crores to 533 crores. So there's a significant jump in the EMI GTV that is getting through BBPS payment system. We see on the CMS, which is a agent-based collection for the enterprises, there's a growth of 562%. That's a starting point of the financial year 21. We had started that, and if we see the growth quarter on quarter, we have 9% growth in sequential quarters, and if we see the previous year, this same quarter, there's a 34% growth in the CMS. So these are our key products which have fairly done well. We can move to the next slide, please. I will request Sanjeev to take it forward from here.
Thanks, Sunil. So I will just continue to what Sunil said. If I were to summarize, there are 2-3 points. One is that the core business, which continues to grow. The key matrices are being the largest ATM banking network driven on the back of ABS as a product, We continue to gain market share. We're over 17% now. The next big business line which we started, collection, which has shown significant growth in the last 2 years, has helped in growing the overall GTV for Spice Money. And now coming to the third, which is the entire network. Today we are at a 1.2 million. And if you look at the right, which is the country geographical presence, it also will give you that there is enough scope of opportunity left for us to grow this network. We are definitely strong in few states and few markets, but I think there is still enough opportunity for us to increase the network. I think that is the next big headroom for growth. We continue to grow the Adhikari network. Next slide, please. A few slides and just recapturing our business model. Our Spice Money entrepreneur, which is whom we call Spice Money Adhikari, uses an app, which is the Spice Money Adhikari app. He's in the center. On one side, there are product manufacturer service partners who want to onboard rural India. We've onboarded those services onto our platform, which is what the Spice Money Adhikari does. And on the right is the rural consumer who comes to the Adhikari to avail these services. So fundamentally, what are we doing? We're solving for the problem of access in rural India and semi-urban India. Rural India consumer, they need assistance, and hence this is an assisted model. We started with ATM banking. We moved to basic payments, and we moved to collections. And obviously, there are many more products that we want to enter to solve for the problem of lack of access for the rural Indian consumers. Next slide, please. At the core of it, we're leveraging on two pieces. I think one is the technology, and second is community. When I say both, let me just explain. One is the technology. When I say technology, it is building on the digital stacks, which public goods which has been built in this country. And second was community, and the community is our Spice Money Adhikari. So there is a community influence that he has in rural India, and hence he's been able to offer those services to the consumers in rural India. I think our business model is hinged on these two verticals. There are digital stacks like that which has helped us to grow till here, which is on the back of obviously PPS, BVPS, even Umang. And there are emerging digital stacks which we want to leverage, which is the ONDC account aggregator, and in future even the digital health ID. And the fact that since we've been able to leverage the current digital stacks in rural India and semi-urban India, we believe that even the emerging digital stack is something that we want to leverage, and we want to solve for the problems of commerce, credit, and even healthcare going forward. Next slide, please. And then if I were to summarize all of this, ultimately, what is it that we're trying to do? We're building the super app for Bharat. A few of the services that I just spoke about, which qualify under core, is what we've been live on. We've been able to build on this. We've done some investment on it. However, we've grown this business significantly. There are the new business lines, which we are also equally excited about. There are opportunities in rural India. We're working to solve for them. And these are places where we've made some investments last year. We continue to make some investments even this year. But few of them will start to show results as we move from now. Next slide, please. I think that's the last slide. Yeah. So thank you so much, everyone. I'm handing it over back to you, Shiv. More than happy to take any questions.
Thank you, Sanjeev. With that, we conclude our opening remarks in this webinar. We now open the floor for questions from participants. To ask a question, please raise your virtual hand, then state your name and the firm you represent. The raised hand option is available within the Reactions tab at the bottom of your Zoom screen. Also, please unmute yourself at your own end before asking your question. I will wait for a moment before initiating the Q&A session. The first question is from Sunil G. Sunil, please ask a question. Thanks.
Yeah, my question is that, first of all, let me understand that what is the business model of our company? Is it like payment aggregator, or are we providing these finances to the MSME or the individuals?
So, Shiv, I'll take that question.
Yes.
So, Sunil, our business model is, let me start, as I said, we are trying to solve for the problem of lack of access. So if I were to very simply explain, if I were to put a rural consumer in the center and I say what are the use cases that he needs, and we write it down.
Sir, can you please speak nearer to this microphone? Yeah.
Can you hear me now?
This is a bit better.
Okay. So I said that if I were to talk about our business model in very simple words, we're trying to solve for the problem of lack of access to a semi-urban and rural consumer. What does that mean? It means that if I were to put a rural consumer in the center and if I were to write down his use cases, his or her use cases, then there are banking, savings, payments, insurance. So there are about 10 to 12 such big use cases. And if I were to get all those use cases onto a platform, and if I want to build a network of entrepreneurs who are digitally savvy at every block and village level, then why does a rural consumer have to step out of the village? Let me explain that in more detail with an example. That today, as a rural consumer, if I want to withdraw money or deposit money, I would have to travel 20 to 25 kilometers to a bank branch, right, to do that transaction. Now, today in today's world, with the technology available, we said, what if we onboard that services, we're using technology, let's say the EPS service of the India Stack on our platform, and we're telling the rural consumer, and we've onboarded a Spice Money Adhikari who's an entrepreneur at a block and a village level. Then the rural consumer today goes to him and he says, listen, I have an account here. This is my Aadhaar number. And he will do his biometric authentication and withdraw money and go home. So now he doesn't have to travel a long distance to avail the same benefit that you and I probably avail within the walking distance of where we stay. Likewise, there's an electricity connection in every house. There is a Tata Sky DTS, there's an LPG cylinder. What does the customer do? Where does he do the payment? He doesn't have to walk anywhere. He just goes to a Spice Money entrepreneur and he does all the payment there. So problem of lack of access is what we are trying to solve. He wants to buy a railway ticket, he does it at our outlet. So if I want to summarize all such use cases for a consumer, we're trying to enable on our platform, and in an assisted manner, the Spice Money Adhikari or the merchant is able to provide all those services to the rural consumers. Today we service from the 1.2 million Spice Money entrepreneurs, we service about 25 million consumers every month on our platform.
So, like next time, can you please put a slide in the PPT highlighting all the different kind of services we are providing so that we can know a bit better about the company?
Maybe if we can go to slide 15. Can we just show slide 15, please, on the presentation?
Yeah.
If you could just zoom on this slide, please. Sunilji, can you see the slide?
Yeah.
So if you look at the boxes in the red, basic banking, payment utility services, and cash collection, and you look at basic banking, MATM, cash withdrawal, current account, saving account, cash deposit, balance inquiry, remittance. So under basic banking, Sunilji, we provide our 1.2 million merchants who have been onboarded on our mobile app. They provide all these services to consumers in their community. So all the ones highlighted in red are what we are calling core business lines, and the ones in blue are new business lines, Sunilji. So directionally, you will see that we are trying to make the whole circle as red as possible. So from basic banking towards cash collection, to travel services, to government services, to financial services, to healthcare services. So the idea is to be able to offer all these products and services on our mobile app, through the merchant to the consumer in the semi-urban and rural India.
So are we also planning to give the loans and also just have the wallet like?
So if you look at it under financial services, we do have credit, and we have already started piloting to begin with operating as a marketplace where third-party lenders can provide credit to our own merchants, our own adhikaris, and moving forward, also to the customer, the end customer in semi-urban and rural India. So yes, if you look at financial services, that's a big part of the go-forward strategy of merchants using our platform to offer credit to consumers in semi-urban and rural India.
Yeah, that's good. Because actually, we have been your shareholder for quite some time and always burning this hard-earned money, because a lot of initiative has been taken since the time there was mobile services. Anyway, so now few things. That, for example, this in the financial services in the loans and in the insurance, we have seen that presently these market leaders, they are almost coming to the EBITDA positive kind of thing. Yesterday there was a result of this Paisa Bazaar and this insurance bazaar and also this Paytm. So, but like certain person here, now you will be competing with those big giants. So what is the strategy to compete against the Paytm and compete against this Paisa Bazaar?
No, Sunilji, very honestly, we are competing, we are operating in two different ecosystems. If you look at Paisa Bazaar and Paytm, some of the examples you have taken, this is end consumers using these apps or platforms to get access to products and services. Our app, Sunilji, is used by small merchants and entrepreneurs who are operating their shops in rural India. And they use our app to deliver credit and insurance to consumers around them. So our model is very different from some of the companies you mentioned.
Yes. Good. Sir, like this, our GTV, it has been totally stagnant for the last 5 quarters. Like in March 2022, it was 24,320 crores. And for the full year, it is 100,000 crores. So like almost just like similar kind of plateau is there. And whereas we have been intensively present in 3 states like this Bihar and MP and UP, and like we have been seeing in this PPT that like we want to spread to the other part of the country also. So, but like why it took no growth in the last year. 1 year has passed. It is post-COVID. Economy is booming. Why we didn't take this appropriate action to grow our GTV?
So if we can go to slide number 11, please. So that's slide number 11. Right. So, Sunilji, if you look at this, we have grown on the AEPS GTV in a year when the overall industry has not grown as much in AEPS. So, during the COVID period, we saw significant growth in the AEPS industry, which slowed down post-COVID. So what happened is last year, the industry only grew 11% on AEPS, while we as a company grew over 16%. That's why we grew our AEPS market share. So despite, we grew faster than industry, right? But because the overall AEPS industry growth slowed down, that had an impact on the overall GTV. But as Sunil explained, if you look at our new lines within the core business lines of bill payment and CMS, you've seen how we are adding new GTV lines of growth. And that is why our overall GTV has grown, from, to 100,000 crores. So I think it's the product mix, Sunilji, and effectively in our core product also, we've grown market share.
So now, for example,
I would like to interject. I think there are several other people who are there in the queue wanting to ask questions. So I think, Sunil, if you can just send us further questions on email or otherwise, I think we can get you to interact with the management and get your question answered as well. If you don't mind, I think next question will be from Praveen Sharma. Praveen, if you can just start with the question, please. Thanks.
Yeah. Hello, am I audible?
Yes, please. You are.
Yeah. Thank you for the opportunity. So I had 2 questions from my side. Firstly, I wanted to understand what role are we playing on the ONDC platform and what is the timeline we are expecting for this platform to be fully operational. My second question is on the Adhikari network. So what kind of contract do we have with them? Is there some kind of exclusivity arrangement that they have with us? And what is the target we plan to achieve in terms of Adhikari numbers in the coming years? So these are my 2 questions. Thank you.
Sanjeev?
Yeah, I'll take it. Thank you so much. First question on ONDC. Like I said, our entire business model has been leveraging digital stacks. ONDC is the next big digital stack that we see coming up, and we believe it's a good opportunity to utilize our own network to democratize commerce. The opportunity that we're seeing over there are about a few of them. While there is an opportunity to open it up on our own network and to provide in an assisted manner commerce services to rural consumers. But I think the larger opportunity, which we are very excited about, and we'll see how it unfolds, is that same Adhikari as a merchant, if he gets onboarded as on the ONDC platform as a buyer, then he can buy a lot of inventory that he needs to sell from all suppliers across the country. And hence it's a big opportunity. So imagine if I were to give an example to illustrate, if I'm a mobile recharge shop, right, and I'm selling accessories like earphones. Today, what do I do as an Adhikari, as a merchant? I go to a distributor who's sitting in a district headquarters to buy those inventory once a week, and I come back and I sell that. Now, if I onboard him as a buyer on the same platform on ONDC as a Spice Money Adhikari, he gets access to all sellers who get onboarded on the ONDC platform by anybody. So he gets an inventory, he gets a different price range, he gets a wider spectrum to order his goods. So that is the opportunity that we are seeing. ONDC is at early stages, but yes, it is moving fast. It is going to take some time as it evolves, and we want to be part of this growth story. I think that is the way we are looking at ONDC. One. Your second question was on the Adhikari network. Today, and are they exclusive? Answer is no, they're not exclusive. They are entrepreneurs today. Legally, they're not exclusive to Spice Money in this, but we believe what differentiates a player and what is going to keep an Adhikari sticky on a network is going to be your platform stability and the number of products that you can offer, which does increase his earnings. I think that is what differentiates us, and I think that is what we are working on. We are 1.2 million today. Do we have a defined number that we want to chase? Answer is no. We don't have a defined number. We believe we're trying to map out the opportunity. We've done some analysis on what is the density of an Adhikari that we should have in a population market per population, and we will continue to follow that rule as we build this network. So that's my answer to your question on Adhikari network.
Okay, I think we'll turn to some questions that appear on the chat box. The first question is from Rishu Dhawan. What will happen to the legacy system? I think Rishu is talking about the B2B business. Will it shut down as contract expires in the next 3 to 4 quarters? Or is there any opportunity to sell it off and generate some money as well? What will be the impact on the balance sheet and P&L for 2023, maybe for FY24 that is?
So, Rishu, let me take that question. So basically, these are all B2B contracts, Rishu. So to begin with, wherever we have built some intellectual property where we've been running these contracts, but we have some IP, we have an opportunity to sell off and generate revenue. Wherever, it is a contract which is as per tender, then there are guidelines in terms of ability to transfer, sell, because it depends on what's written in the contract. Directionally, our goal is to exit all these contracts by ensuring business continuity, because these are important relationships and we have to honor our contracts as a company. So wherever we see opportunity to generate revenue, we will look at it. Wherever it is a simple transfer of contract, we will basically just close the delivery of the contract as the contract expires. So it's a combination of both the points that you mentioned. The impact on the balance sheet and P&L, Rishu, of course, our goal is to, come out, not with a lot of negative impact, because certain contracts we will have to exit and certain costs of people we'll have to carry for some time on our books. So I will not be able to call out exactly the impact for this financial year, but needless to say that directionally, as I look at the year next, this segment which was, holding back our growth and profitability will definitely not continue to do so. So I will, look at more FY24 versus FY23 because some of these contracts, will play out during the course of this year. But we are definitely not investing in procuring new contracts or engaging to acquire new customers. You are on mute.
Yeah, sorry, I got muted. The next question is also on the chat box from Harshit Jain. I've just started looking into the fintech business. What are the opportunities in this segment? What are the growth expectations 3 to 4 years down the line? And what are the entry barriers in this segment? And also, who are the competitors? And how do you plan to tackle the competition?
Sanjeev, you want to take that?
Sure, Ashit. So, the opportunity, I think what places us in a very unique position to capture this is, and why we're excited about it, is that there is this space wherein not many players are, and I don't know how to define players, but yeah, let me talk about it. In this area of semi-urban and rural, which is a very, very large market, which is about 80 to 82 crore of population. To solve for this problem of access, we don't see anybody. On one side, there are payments banks, and there are certain, on the other side, there are business correspondents solving for one need, which is about on banking. We've taken a slightly different role here. We believe that there's an opportunity to solve for all financial and digital services, keeping the rural consumer at the center. And I think that is what has played us, in my mind, puts us in a unique position. The fact that we are not licensed with a platform business, which gives us an opportunity to get all services that a consumer needs in a market which we believe is unexplored, and it's very, very large. Our unique model, leveraging technology and entrepreneurship, which is community-led, is the second big reason that I believe has given us, this places the Spice Money model in a unique advantage. Two. Third, the way we see directionally over the next 3 to 4 years, like we said about that super app, if I were to get all those services onto my platform, make them red, and hence I'm able to offer all the products and services on my platform, is the first checkpoint that we have internally. Second point, if we do that, it definitely helps us as an organization to generate operating leverage, right? Use the same networks. I think that is the second big goal that we are looking at as an organization. Two. Third, the ability to serve such a large population. The fact that today on our platform, lifelong, about 15 crore consumers have been serviced has placed us in a very, very again in an advantageous fashion, and hence we're able to customize products for the rural consumer bottoms up, which is again is allowing us to build more and more products and services, hence more transactions on the platform, more earnings for the adhikari, and a far deeper engagement between the consumer and the adhikari. So that's the answer to your question, Harshit.
Okay, thanks, Sanjeev. The next question also again from the chat box from Avanti Poredi. What services are particularly covered in investments in financial services category, slide 15? Individual point of view and company point of view. As in what are retail services and what are corporate services within financial services in slide 15 is what you would like to ask. Could you give an example as well? Financial services covered in slide 15 is what they're asking.
Okay, so I think in financial services, you want to go back to that slide on 15? Yeah. Just open this up. Just blow this up. So if the answer is what is savings, investment, insurance, credit? These are the typical financial services products. Under savings and investments, we trying to look at all products like a micro FD, digital gold. We want to look at products in terms of even mutual funds, bonds, but again, it's going to have a life cycle of its own. At the present, we're looking at very simple products that we can get, which will be easy to be sold from an Adhikari network.
Yes. Okay, so the next question, we see a raised hand from Sunil G. once again. Sunil, please ask a question. Thanks. Okay,
the other expenses in the March 2022, it was 18 crores. Now, during the last year, our GTV is almost flat, but other expenses have increased from 18 crore to 27 crore. There is about 50% jump in other expenses. So what steps are we going to take to reduce it significantly in the next year?
Sunil,
You want to take that?
Yeah. So basically on the expense side, we had done some investments. If we see, just a moment. You are referring for overall expenses or?
In consolidated.
Can you specify?
In consolidated.
Yeah, maybe we can go to slide number 9.
In consolidated.
Slide number 9, if you can just zoom that, please.
Yeah.
So just bringing it up. Yeah. Yeah, Sunilji, which is?
So, which number you are referring?
I'm referring the consolidated result in the. No, I'm referring to the P&L account. Consolidated P&L account. Other expenses 1806 lakhs in 2020 quarter, and this quarter it was 27 crore.
You are referring from the results P&L,
Results,
not
yes.
from the this.
Results.
Okay. Just a moment.
Okay.
Hmm. 27. So you are referring for the 27 crore from 18 crore, right?
Yeah.
Okay. So, giving the explanation towards this 9 crore jump, if you see that indirect cost, which is primarily these other expenses and employee benefit expense, this is a change in the, I will say that on the marketing, traveling expenses, and some of the administration expenses. This is primarily a combination of both the segments. So if we go through this separation of it, that we have invested in the manpower on the ground, and from where we have to kind of have the travel expenses increase in the admin expenses, which is in other expenses, one, in March 22, which is in this quarter. And there is also some of the expenses with respect to closing down of some subsidiaries in the Digispice technologies. Those are the legal and professional expenses that has kind of come up over there. So that's the reason, but that will not be kind of continue with respect to going forward. And some of the other expenses may be having that some write-off for the provisions what we have done for the collections in the Digispice services business. So it's a combination of that. Primarily, I will say on the operational side, that what I mentioned with respect to the travel expense in the marketing cost, and second, with respect to the foreign exchange loss and foreign exchange loss and the provision for doubtful debts?
See, whatever it can be, I think it requires this urgent attention, kind attention of Mr. Dilip Modi and Mr. Sanjeev Kumar, because now I'll tell you something different. Because in year 22, the other expense was 65 crores. And in year 23, it is 93 crores. Means 28 crore jumps, a 45% jump, which is totally unacceptable. And like this, like if you further deep down it, you can see in this December quarter also this expense is 23 crore. So like almost in 4 quarters, it's in the range of 23 crore, whereas it was only 16 crore average in the last year. So it cannot be like whatever expense you are saying. For example, now we are present only basically in 3 states. Now we are planning to like spread to the other state also. If the same like rate of this admin traveling expense will go, it means we will never be like this net paid positive. So why don't we use the technology? Like for example, like nowadays mobile is free, net is free. So why don't we use this technology to reduce our cost also when we spread to other countries, to other states?
You are right that we have increased the cost, but please appreciate that we have invested into the other segments also, for which we will be seeing the results in the coming quarters, what we had shown in our presentation with respect to the Spice money. And for the Digispice business, wherever the cost has increased, that is primarily we mention it out that we are bleeding over there and we want to get rid of. That's why this decision has been taken. So you will find that there will be a reduction in the cost due to the decision what we had taken to kind of shut down and come out from the Digispice services business. So yeah, please.
Sunilji, if I was to add, I think very clearly you'll have to look at the other expenses between businesses we are exiting and businesses we are continuing. The business which we are continuing, which is the financial technology services business, we agree with you, Sunilji, that we are very committed to building out a model where we are more tech-led than people-led. However, we are working in an ecosystem which is semi-urban and rural India, where we cannot be pure digital. We have to be digital and physical. And that is our moat going forward, because we have to also ensure that we are able to engage with our adhikaris on the ground. But we are leveraging technology wherever we can. So, Sunilji, we are very much conscious of the fact that in this business, we have to deliver operating leverage, and that will only happen if our revenues grow faster than costs. But we know that this is a business of scale and scope. So we have to extend and build scale, which means reaching out to more parts of India and using technology and third-party feet on street. And second is increasing products on our platform, and both require investment. So we are trying to create a balance between ensuring that we keep growing the business in scale and scope, as well as maintaining profitability. And that is why we've divided between core and new business lines. So we are very conscious of the fact that we have to keep our head above water and profitability, but we have to build out the platform in terms of scope of services, Sunilji, in order to make sure that this business is competitive in the long term. And then we can create a foundation such that this business can then continue to grow with operating leverage.
Oh, sir, I fully appreciate your views. That's what I like. My point was that it requires some sort of continuous internal audit also, because see, like for example, last year it was 65 crore. Even if you allow 10% as inflation or whatever, so it will be 72 crore. It is 92 crore. So what I'm saying, 20 crore, suppose like it has happened. Suppose next year, if you can control it, we will be paid positive. So I'm only saying that please put some internal audit system that whatever expenses are coming from this adhikari or from our team, whatever, how it can be reduced and how can you optimize it so that so that we don't bleed it in these kind of regular expenses, because if this become a habit, it will be a habit forever.
Yes. No, I agree, Sunilji. I think we are committed to driving cost efficiency in our business, and absolutely agree with you that as we try and build a long-term business, we have to make sure that we are efficient on cost. Sunil, you want to add to this? You were saying something? Yeah.
Yeah. So Sunilji, as I had explained, just to give you the kind of almost the figures where this cost has gone up. This cost has gone up almost 6 crore in the provision for doubtful debts and foreign exchange difference, which is a Digispice business. Okay, 6 crore has gone into that, and almost 1 crore is in the additional expenses with the legal and profession, what I had called out. So 7 crore has gone into this, which is not a kind of a regular item, and which relates to Digispice only, because you were referring about that we have to expand into the other areas also, these services. So of course, we are cognizant of that, and just for information, nothing to kind of offend you. We have an internal audit system, and that reports to audit committee, and we are cognizant of that aspect. And I want to assure you that we have taken this decision of shutting down by much deliberation, that we are not able to kind of take that business positive, and that was dragging our results and giving the picture what you are painting it, which is very much correct. So we are in I will say that whatever you are saying is correct. So, and we have taken the cognizance of that, and we are acting also on the same line.
Good. Last question, Mr. Sanjeev Kumar, that for example, for FY23-24, what is the target for GTV as against rupees 1 lakh crore, which we have achieved in year 2023?
So, Sunilji, I want to start from the last conversation, then I'm going to go here. I think it's very important because it's not about you, but it's for everyone. I think there are two. The fact that we are exiting the other B2B business, which is dragging on the profitability, is a very, very important demonstration of profitability for us. Second, even if you look at the cost of the last 2 quarters for Spectrum, you will realize that it has been at a static level of 39 to 40 crore max, which means our own lens to look at cost is a very, very important one, and we'll continue to do that as we build the business too. Third, I do not want to call out a target number for GTV, it will not be fair, but I think I definitely want to call out for here is that it's not only GTV, as we scaled up, and it's a large GTV business that we are on. I think the opportunity is also to increase more on the GM side. So the service fee, GM vis-a-vis service revenue, which is now at 36, I think the opportunity is to increase that and not just look at GTV. So while GTV will increase by certain percentage, I think opportunity to get more products which can have far more revenue impact and GM impact is going to be something key for us, Sunil. So that's how the way we are looking at the next year.
So like, where do we see our company in 3 to 5 years, and who are our main competitors?
So Sunilji, like I said, there is payments bank on one side, but then there are banks. They have their own limitations and advantages. We are uniquely placed being a platform organization, which allows us to offer all products and services which a rural consumer needs. I think that is one space which there is nobody in, according to me, especially in the space that we are in, the segment that we are, the semi-urban and rural, and hence that is the advantage. Where do we see ourselves? Like we said, I think across all products and services onto our platform, that is on a product side, which increases the transaction, which increases margin and revenue. And directionally, this network has to be an operating leverage network because we are in the service business. So I think these are the 2 big points that I can call out what we will be doing.
One humble suggestion, sir. Just excuse me, sir. One humble suggestion. Since our entire business is modeled on the finance, be it the payment of electricity bill, be whatever kind of thing. So what inbuilt security has been made to avoid any kind of fraud by any adhikari or by anybody in the chain? Is it all the money flows through the online, or is there any case movement also? So what is the precaution we have taken for that?
Sunil, you want to talk about it?
Yeah, just to give you an idea about all the transactions are happening on the platform, which is stitched with the banking system or the NPCI, and as far as online transactions frauds are there is no such case exists because with respect to the transactions happening, there is a systematic checks by the NPCI or the banks already in place with respect to the value of the transactions, limit on the transactions. So these types of course, there may be possibility of on the ground frauds, and we are well equipped with respect to how to curb that, and we have a in-house system that we can control and kind of take the mitigation steps for any such actions on the fraud.
So you are saying that there is no movement of case, like it's everything is online.
Physical interaction of the adhari with the customer is there, and
I'll move into the next question from the chat box. It comes from Shahrukh Joshi. What is the current state of the tech business for your CPaaS product? Considering it is a substantial industry, what is the projected growth forecast there?
Let me pick on that point. Sorry, did you mention Shahrukh, Shiv?
Yeah, Shahrukh Joshi, yes.
Yeah, I got it. So, Shahrukh, CPaaS, as you know, we called out a platform referred to as Corero. And this is a segment 2.5 years back we called out because we were very much present in the enterprise SMS business. And we thought that we could go omni-channel with our same enterprise customers because communication platform as a service is basically allowing enterprises to be able to get an omni-channel platform where they can communicate with customers not through just one channel, which is SMS, but multiple channels of voice, email, WhatsApp, and others. We did invest and build out the platform as we had communicated in our previous calls, Shahrukh. But one of the things we realized during COVID especially is that a lot of companies, customers, the stickiness of large enterprise customers to their CPaaS platforms continued. So we saw very little churn happening, and every time someone went in with pricing as an option, the existing vendors matched the pricing to hold on to the customer. We also saw global players in CPaaS enter this space and acquire some of the domestic companies. So we saw a lot of M&A activity as well. Net Shahrukh, we realized that the CPaaS space was a lot more competitive than we thought it was. And the fact that we had existing customers on our SMS business, that we would be able to move them from just doing SMS business with us to also consuming other channels, Shahrukh, we found it very difficult. And they continue to operate with their other vendors, and many people came in with some of these CPaaS companies went public, and many of them got acquired by large companies, and very aggressive pricing, Shahrukh. In fact, some of the telcos also jumped in with their CPaaS platform to offer very aggressive pricing to enterprise customers. So this became a very, very aggressively competitive segment, Shahrukh. So while there is projected growth forecast, especially in digital channels going forward, but with the kind of investments companies are making now in chatbots and in voice bots and in automation, this industry in itself requires significant investment to participate in this growth. So for us, Shahrukh, we had a choice to make that, which is the segment we want to chase, where do we have a right to play? And we decided that, compared to the financial technology services segment where we already have a head start and we have a merchant base of over 1 million merchants with whom we can double down in terms of services and scope, that we would rather chase that segment than invest in CPaaS. CPaaS is an investment game, and you have to make deep investments in order to, grow in line or better than industry. And so, strategically in terms of, where are we better placed to extract better return and value for shareholders, we took a view that instead of CPaaS, let's focus on fintech. And that's where we are currently focusing. On the CPaaS product, we have built out the product. We are running it with some of the enterprises. We will continue to see if there are potential buyers of the product we have. But given what we see in the market, it's extremely competitive with lots of large and new startups who are entering the space. So, Shahrukh, our focus is to maximize our investment and opportunity in the fintech segment, especially in semi-urban and rural India. So that's where we'll continue to be focused, Shahrukh, going forward.
Yes. Thank you, Mr. Modi. I think the last question is a follow-up from Harshit Jain. What is the expected margin, that is operating margin, going forward? What do we... Yes.
While Sunil can answer in more detail, I would say that effectively, as we add more products to the platform, the idea is to improve on our take rate. But Sunil, you want to just talk about margins?
I think margins, I think margins dependent upon the product portfolio, and then the whole product portfolio, some of having a better margin and some are others. And now we are, for an example, we are now providing the CASA services, saving account services also. There is no GTV attached to that. So, gross margins are high if in terms of. So gross margin overall basis, as I mentioned it out in my presentation with respect to financials, that's from 28% to 38% in this quarter, and overall 36% on the service fee revenue. We intend to have a better margin and continue to try to optimize it. But having said that, we can't give the guidance with respect to that, because a lot of other products, as they will mature and start contributing significantly, product mix margin may kind of get changed. But that depends upon what product will take off and contributes more on the overall size of the opportunity. So that's where we are with this. But of course, as far as performance is concerned, we are improving kind of year on year on that.
Okay, there's another question in the chat box from Shahrukh Joshi once again.
Hope I've well done.
Hello. Yes, hi. There's another question from Shahrukh Joshi in the chat box. He says, "Thank you, Dilip ji, for answering my question. My last question to the management team here. What is the current attrition rate across the organization? No one talks about people who help support the system that you've built."
So Shahrukh, let me comment. It'd be unfair to give an attrition rate, but I don't know if you're aware, we are a great place to work certified for the second year. And even there, we are in the top 50 organizations in the financial services industry in terms of rating. People is a very, very important aspect of as we build Spice Money. Very important. I fundamentally call customer first and people first as two big pillars of Spice Money. There are many policies, many ways, many digital tools that we use today internally to measure employee feedback, satisfaction, and how we work with the employees to build this as one of a great place to work in. We have attrition in two cases, obviously on the sales side and non-sales side, but we are pretty well within the industry benchmarks right now, Shahrukh.
Yes, thanks, Sanjeev. With that, we will come to a close on this session, and I would request Mr. Modi and management team to make any concluding remarks. Mr. Modi.
Thank you, Shiv. Thank you, everyone who took time out to be on this call. I definitely feel these are great opportunities for us to get real feedback on the business. We are in a very dynamic space, which constantly is throwing up new challenges and opportunities. We have headwinds and tailwinds all at the same time. And, it's very important that we stay the course. We are definitely in an ecosystem which is underserved, which is semi-urban and rural India. And we believe the best way to serve this ecosystem is through a unique model of technology and people. and that's what we are building at Digispice through Spice Money. We continue to stay committed to this path. We are a mission-driven company, and we will continue to remain that. But we are also very conscious that we are a listed company, and we have to be able to generate significant profits. But we are in a dynamic space, and therefore, we have to balance between investment and profitability. And we are trying to, as a management team, maintain that balance. I look forward to all our current shareholders and potential partners to continue to engage with us and give us the opportunity of feedback on a regular basis. This is a business of patience. We are building out the last mile digital infrastructure in deep rural India, and we do hope that this patience will pay out over time. I just again would like to thank all of you for taking out the time, for your trust and confidence. And at Digispice and Spice Money, we all will continue to ensure that we stay the course and stay committed to our mission of solving for lack of access in rural India. So thank you very much to everyone.
Thank you, Mr. Modi, for the concluding remarks. And I think we'll conclude the session here, and you may now disconnect from this call.